The problem isn't that you don't have a mentor. It isn't because you haven't bought an expensive course. It isn't even because nobody has shown you exactly how to trade. You can literally watch thousands of hours of successful traders, see every chart they take, every entry, every exit, and still lose money the moment you start trading yourself. So why does that happen? Why do almost all beginners lose even after learning from the best? And why might buying another course or joining another workshop actually be one of the worst things you can do right now? Stay with me until the end of this video, because once you understand this one reason, you'll finally stop asking the wrong question and you'll understand why losing at the beginning isn't just normal. It's almost impossible to avoid. The biggest lie every beginner believes the moment someone discovers trading, they almost always ask the same question: what's the best strategy? Not, how long does it take to become profitable? Not, how many mistakes will I have to make? Not even, what kind of person do I need to become? Instead, their entire focus becomes finding the strategy that nobody else knows. They open YouTube. One creator says price action is everything. Another says ICT is the only real way to trade. Someone else says smart money concepts change their life. Then another trader claims indicators are useless 5 minutes later. Someone else makes millions using nothing but indicators. Now the beginner is confused. Who is actually telling the truth? So they do what almost everyone does. They choose one strategy, spend 3 days learning it, lose a few trades, then immediately think, maybe this strategy doesn't work. So they search again, a new video appears. The strategy banks don't want you to know. This strategy has a 95% win rate. The only setup you'll ever need. Again, hope returns. Again they study, again they lose, again they switch without realizing it. Months pass, sometimes years, not because they're lazy, not because they're stupid, but because they're solving the wrong problem. The strategy was never the biggest obstacle. Think about it for a second. If strategy alone created profitable traders, then everyone using the same strategy would make the same amount of money. But they don't. Thousands of people can watch the exact same lesson, see the exact same chart, mark the exact same entry, yet one trader makes money. Another breaks even, and another blows their account. How is that possible? The information was identical, the charts were identical, the teacher was identical, so what changed? The person behind the screen, because trading isn't a test of memory. It's a test of decision-making under uncertainty. Knowing where to enter is easy. Clicking the button when fear takes over, that's different. Knowing where to place a stop loss is easy. Actually, accepting that loss, that's different. Knowing you shouldn't revenge trade following that rule after 3 losses in a row, that's different. This is the lie almost every beginner believes. They think they need better information, when in reality, they need better judgment. And judgment is something no video, no course, no mentor can simply hand to you. It has to be built trade after trade, mistake after mistake, loss after loss. Only then does knowledge slowly transform into experience. Knowledge isn't experience. Now let's say you finally stop jumping from strategy to strategy. You find a mentor you trust, you buy the course, you watch every lesson, you take notes, you understand every concept. Support, resistance, liquidity, risk management, market structure. Everything makes sense. For the first time, you feel confident. You tell yourself, now I know how to trade, but then Monday comes, the market opens. You take your first real trade. Within minutes, everything you thought you knew disappears. Your heart beats faster. Your hand hesitates over the mouse. The candle starts moving against you. Suddenly, you're no longer thinking clearly. You move your stop loss. You close the trade early, or worse, you refuse to close it at all. What happened? 5 minutes ago, you knew exactly what to do. Now you can't do any of it. That's because knowledge and experience are not the same thing. Imagine you've watched hundreds of videos about riding a bicycle. You know where your feet go, you know how to balance, you understand how to turn. You could probably teach someone the theory, but the moment you sit on the bicycle, you fall. Not because the information was wrong, because your body hasn't learned it yet. Or imagine watching the world's greatest swimmer. You understand every movement, every breathing technique, every stroke. Then someone throws you into deep water. Suddenly, understanding swimming and actually swimming become two completely different things. The same is true in cooking. Millions of people watch Gordon Ramsay. They know the recipe, they know the ingredients, they know the timing, but if they tried to recreate the same dish, most couldn't. Because watching excellence and performing excellence are worlds apart. Trading is no different. Watching someone mark a perfect trade feels easy. Executing that same trade with your own money, knowing you could lose, changes everything. The market introduces something no video can simulate, pressure, and pressure reveals what you truly know, not what you've memorized. That's why experience is priceless. It teaches lessons your brain simply refuses to learn from observation alone. Why copying trades never works long term, losing enough times. Most beginners come to another conclusion. Maybe I'm just making my own decisions. Maybe I should simply copy someone who's already profitable. At first, it sounds logical, if a successful trader makes money, why not just copy every trade they take? Surely that should work. And for a while, it might. You join a signal group. You copy every entry, every stop loss, every take profit. Sometimes you even make money. You start believing you finally found the shortcut. But then something strange happens. Slowly, your results begin to fall apart, not because the trader suddenly became bad, but because copying decisions is very different from understanding them. Imagine two people looking at the exact same chart. One sees confusion, the other sees opportunity. The chart didn't change, the person did. A profitable trader isn't just following rules. They're reading context, they're noticing tiny details most beginners don't even realize exist. They notice how price is behaving, how fast candles are moving, how volume is changing, how the market reacted yesterday, whether buyers look confident or exhausted. These aren't things you can simply copy. They're things developed through thousands of hours of observation. And then there are emotions. The trader you're copying risks an amount they've already accepted. Maybe losing that trade doesn't affect their emotions at all, but you've put in half your account, or maybe money you couldn't afford to lose, so the moment price moves against you, fear takes over. You close the trade early, meanwhile, the original trader calmly follows the plan, and the trade eventually reaches profit, same trade, different result, because emotions change the outcome. Account size changes everything too. Someone trading $1 million account thinks differently than someone trading their last $200. One person can patiently wait for the highest quality setup, the other feels pressure to trade every day. Not because the market demands it, because their emotions demand it. Even risk tolerance is different. Some traders are comfortable seeing several losing trades in a row. Others panic after just one. The strategy hasn't changed. The person has. This is why copying trades can never become a long-term business model. You're borrowing someone else's decisions without borrowing the years of experience that created those decisions. Eventually, you'll reach a moment where the person you're following isn't there. No signal, no live stream, no mentor telling you what to click. Now you're alone with the chart. And that's the moment every trader eventually faces. Because the goal was never to become someone else's shadow. The goal was always to become the kind of trader who can sit in front of a chart, trust your own judgment, and make decisions with confidence. The ability cannot be copied. It has to be earned, trade by trade, mistake by mistake, hour after hour, until one day, without realizing it, you're no longer asking, "What would my mentor do?" You're asking, what does the market tell me? And that's when you stop thinking like a beginner and start thinking like a trader. The pain nobody can skip. Eventually, something changes. You stop asking for better strategies. You stop copying every trader you see. You stop believing someone else has a secret that you don't. Now, for the first time, you're alone. Just you, the chart, and your decisions. This is where the real education begins. Not inside a course, not inside a YouTube video, but in the moments where no one can tell you what to do, because this is where the market starts teaching lessons that cannot be explained with words. Your first lesson usually comes before you even enter a trade. You see the market moving, it looks like it's about to explode upward. Your heart starts racing, you don't want to miss it, so you enter, only to watch price reverse immediately. You entered too early. The market wasn't teaching you that your strategy was bad. It was teaching you patience. The next day, you decide you'll wait longer. This time, you're determined not to make the same mistake. You wait and wait and wait. Price reaches your entry, but you hesitate. What if this one loses? A few seconds pass, then the market takes off exactly where you planned. Without you, now you've entered too late. Or maybe you never entered it at all. The lesson? Confidence, not because confidence feels good, but because hesitation has a price. Then comes fear, not the fear of charts. The fear of losing money. You enter a perfect trade. Everything follows your plan. Then price moves slightly against you, only a little. Nothing unusual, but inside your mind it feels enormous. Your hands become restless. You close the trade. Minutes later, price moves exactly where you expected from the beginning. You were right. Your fear simply refused to let you stay. Then greed arrives. This one feels different. You finally caught a beautiful winning trade. You've reached your profit target. Your plan says, take profit, but your emotions whisper, what if it goes even higher? You stay in, one more candle, then another, the market reverses, your profit disappears. Sometimes, it even becomes a loss. The market wasn't teaching you how to make more money. It was teaching you when enough is enough. Then comes one of the hardest lessons. The stop loss. You know exactly where it belongs. You placed it there for a reason. Price gets close, your stomach tightens, you think it'll come back. So you move the stop lower, then lower again. Eventually, a small planned loss becomes a disaster. Not because the market surprised you, because you refuse to accept being wrong. And that's one of the hardest truths every trader must face. Being wrong isn't expensive. Refusing to admit you're wrong is, after that. Many traders discover revenge trading. You lose one trade, then another. Now you're angry, not at yourself, at the market. You open another position immediately. Not because it's a good setup. Because you want your money back. The market doesn't care. It simply keeps moving. Your decisions become faster, less logical, more emotional. Hours later, you've lost far more than the original trade ever cost. Eventually, overconfidence appears. After several winning trades, you start believing you've figured it all out. You increase your position size. You stop following your rules. You think, I can't lose? The market has a way of humbling people who believe that. One trade later, weeks of profits disappear. Not because your strategy failed, because your discipline disappeared. And perhaps, the quietest mistake of all, is hesitation. Sometimes the perfect opportunity appears. You recognize it. You've seen it dozens of times before. Everything aligns. Yet your finger won't click. You remember your last loss. Your confidence disappears. You watch the trade happen without you. And once again, the market teaches another lesson. Not every loss comes from taking bad trades. Sometimes the biggest losses come from never taking the right ones. By this point, you may think all these mistakes are signs you're failing. But they're not. They're signs that you're learning. Every professional trader has entered too early, entered too late, moved a stop loss, held losers, taken profits too early, revenge traded, frozen in fear, become greedy, become overconfident, hesitated. The difference isn't that professionals never made these mistakes. The difference is that they stopped making the same mistake over and over. Every painful experience became a lesson. Every lesson became a habit. Why losing is actually collecting data? If losing is part of the process, then what's the point of losing? The answer is simple, because every loss contains information. The problem is, most beginners only see the money they lost. Professional traders see something completely different. Imagine two traders who both lose the exact same trade. The beginner closes the chart and says, "I lost $100. Then they spend the rest of the day trying to make that money back. The professional closes the chart and asks, "What did this trade just teach me?" Same loss, completely different mindset. One trader lost money, the other gained information, and over time, information becomes far more valuable than the money lost to collect it. Because money can always be earned again, but experience has to be built. Think about how scientists work. A failed experiment isn't automatically considered a failure. It's evidence and tells them what doesn't work. That information helps them get closer to what does. Trading works the same way. Every losing trade leaves behind clues if you're willing to look for them. Instead of asking, "Why did the market do this to me?" ask, "Why did I enter this trade? Did I actually follow my plan? Or was I simply impatient?" Ask yourself, why did I panic? Did the market really change? Or did my emotions change? Ask yourself, why did I ignore my own rules? If I knew the rule, why couldn't I follow it? Was I trying to avoid pain? Was I chasing excitement? Or was I trying to prove that I was right? Then ask perhaps the hardest question of all, would I take this exact same trade again if I could go back? If the answer is yes, then maybe it wasn't a bad trade. Maybe it was simply a normal loss. These patterns are invisible while you're trading, but they become obvious when you review your own history, and once you can see a pattern, you can change it. That's why professionals don't fear losing trades. They fear repeating the same mistake without learning from it. A loss that teaches you something is an investment. A loss that teaches you nothing is simply an expense. The market is constantly giving you feedback. Every candle, every trade, every mistake, every emotion, it's all data. The question is never whether you'll collect that data. The question is whether you'll ignore it or use it to become a better trader. Because the traders who improve the fastest aren't the ones who lose the least. They're the ones who learn the most from every loss, and eventually, after hundreds of trades, something remarkable happens. You stop reacting emotionally to losses. Instead, you become curious. You stop asking, "How much money did I lose?" and start asking, "What is the market trying to teach me that I still haven't learned?" That single shift in perspective is often where the journey from beginner to consistently profitable trader truly begins. After you've spent enough time trading, you eventually realize one of the hardest truths the market will ever teach you. The market is completely indifferent. It doesn't care who you are. It doesn't know your name. It doesn't know how hard you've worked. It doesn't know how many videos you've watched. It doesn't know that this is your last account. It doesn't know that you need this trade to pay your rent. It doesn't know that your bills are due tomorrow. It doesn't know about your dreams of financial freedom. It doesn't know how badly you want to quit your job. It doesn't know that your family is depending on you. It doesn't know how much confidence you lost after the previous trade. And most importantly, it doesn't care. That may sound cruel, but it's actually one of the fairest things about the financial markets. Because the market treats everyone exactly the same, whether you're a beginner with a $100 account or a hedge fund managing billions. The candles move exactly the same. The market gives no special treatment. no sympathy, no second chances because you deserve one. It simply moves up, down, or nowhere at all, And that's exactly why so many beginners struggle, because they expect the market to reward effort. I studied all weekend. I spent 6 months learning. I deserve a winning trade. But the market doesn't reward effort. It rewards good decisions. You can work harder than anyone else and still lose money if your decisions are poor at the same time. Someone with less experience can make money simply because they followed their plan with discipline. The market isn't emotional. We are. Think about what happens after a losing streak. Suddenly, every chart looks dangerous. You hesitate, you doubt yourself. You start seeing risks that weren't there before, but the market hasn't changed. Only your emotions have. Then imagine the opposite. You've won several trades in a row. Now every setup looks perfect. You feel unstoppable, You increase your position size. You stop respecting risk again. The market hasn't changed. Only your emotions have. This is why professional traders spend far more time managing themselves than trying to predict the market. Because they know something beginners eventually discover the hard way: you cannot control what the market does. You can only control how you respond to it when the market changes. You adapt when volatility increases. You adapt when your strategy stops performing. You adapt when conditions become uncertain. You adapt, Notice the pattern. The successful trader doesn't demand that the market behave differently. They change themselves. Imagine trying to sail across the ocean. You can't control the wind. You can't tell the waves to calm down. You can't ask the storm to wait until tomorrow, but you can't adjust your sails. You can change your direction. You can prepare your boat. Trading is no different. The market is the ocean, your strategy is the boat, but your mindset, that's the captain. A bad captain blames the weather. A great captain learns to navigate it. And perhaps that's the greatest lesson the market ever teaches. The market is not your enemy. It is not trying to punish you. It isn't testing whether you're a good person. It's simply reflecting reality. A reality that changes every second. Your success has never depended on making the market adapt to you. It has always depended on learning to adapt to the market. Because the day you stop expecting the market to care about your feelings is the day you finally start taking full responsibility for your decisions, and that is where real consistency begins. Why most people quit right before improvement after months, sometimes years. Something begins to happen, not to your account, to your mind. You're exhausted, not because trading is physically difficult, but because making thousands of decisions, dealing with uncertainty, and managing your own emotions every single day slowly wears you down. You start asking yourself questions you never imagined asking. Maybe I'm just not smart enough. Maybe trading isn't for people like me. Maybe everyone else understands something I don't. Then you open social media. Someone claims they made $10,000 today, Another says they haven't had a losing week in months. Another advertises a strategy with a 95% win rate. Suddenly, it feels like everyone is succeeding except you, so you begin comparing your beginning to someone else's highlight reel, and comparison quietly destroys your confidence. You stop trusting yourself. You start believing the problem is you. Not because you've proven it, but because you're tired. This is the stage where most people quit. Not after their first loss, not after their second account, but after they've spent enough time learning to become frustrated. Yet not enough time to see the results of that learning. Think about learning any difficult skill. Imagine someone chopping down a tree with an axe. The first swing changes nothing. The 10th swing changes nothing. The 50th swing still doesn't make the tree fall from the outside. It looks like none of those swings mattered. Then, suddenly, one final strike brings the entire tree crashing to the ground. People often believe the last swing caused the tree to fall. It didn't every swing before it mattered. The last one simply revealed the progress that had been building all along. Trading works the same way. Every chart you've studied, every mistake you've analyzed, every losing trade you've reviewed, every emotional decision you've learned from, they're shaping your judgment, even if your account doesn't show it yet. The problem is, progress in trading is almost invisible while it's happening. One day, you'll notice you no longer panic during a losing trade. Another day, you'll realize you automatically avoid a setup you would have taken 6 months ago. One day, you'll patiently wait instead of chasing the market. None of these moments feel dramatic, but together, they're transforming you into a different trader. Most people never reach that point. Because they quit while the transformation is still happening, they mistake slow progress for no progress. Then they return to searching for another strategy, another mentor, another shortcut, another promise starting over from the beginning, again, and again and again. The traders who eventually succeed aren't always the smartest. They aren't always the most talented. Many aren't even the fastest learners. They simply stay long enough for experience to compound, eventually. All those painful lessons begin connecting together. Patterns become obvious. Decisions become calmer. Confidence no longer comes from hope. It comes from evidence earned through hundreds of trades. So if you're in that stage right now, tired, frustrated, questioning yourself, wondering whether trading is even meant for you, understand this. The hardest part of the journey often comes immediately before everything starts making sense. Not because success is guaranteed, it isn't, but because every trader who eventually became consistently profitable had a moment when they believed they weren't good enough. The difference is, they didn't let that moment become the end of their story. They kept showing up, they kept learning, they kept adapting, and one day, almost without realizing it, they stopped trying to become a trader, because they had already become one. If you've watched this far, you've probably expected this video to give you a strategy, a secret, a shortcut, or maybe one piece of information that would suddenly make trading easy. But that was never the purpose of this video. Because the biggest obstacle standing between you and consistent profitability was never hidden inside a strategy. It was hidden inside your expectations. The expectation that someone else could save you from making mistakes. The expectation that one perfect mentor could eliminate uncertainty. The expectation that one course could replace years of experience. The truth is, every profitable trader has been exactly where you are, frustrated, impatient, overconfident, fearful, They questioned themselves. They doubted whether they were good enough. They wondered if trading simply wasn't for them. The difference wasn't that they avoided those moments. The difference was that they kept learning through them. Every mistake became a lesson. Every loss became feedback. Every difficult day became another step toward becoming a different trader. One day, they realized something that every beginner eventually has to understand. The goal was never to stop losing. The goal was to stop losing for the same reasons. Because mistakes don't disappear overnight. They evolve. The impulsive entries become patient decisions. The oversized losses become controlled risks. The emotional reactions become calm observations. The hesitation becomes confidence. The fear becomes respect, and little by little, without even noticing, the person sitting in front of the charts changes. That transformation is what creates consistency. Not a magical indicator, not a secret strategy, not a signal group, D. The market is one of the few places where money follows personal growth. The better your discipline becomes, the better your decisions become, the better your decisions become, the better your results become. That's why becoming a profitable trader is never just about learning the market. It's about learning yourself, your fears, your habits, your weaknesses, your strengths, because every chart reflects more than price. It reflects the person making the decision. So the next time you lose a trade, don't immediately ask, how can I avoid ever losing again? Instead ask, what is this loss trying to teach me that I haven't learned yet? That single question can change the direction of your entire trading journey. Remember, the trader who succeeds isn't the one who never loses. It's the one who refuses to waste a loss. You don't become consistently profitable because you finally stop making mistakes. You become consistently profitable because your mistakes become smaller, less frequent, and easier to recognize before they become expensive. Eventually, the habits that once destroyed your account no longer control your decisions. And that's the moment trading begins to change. Not because the market became easier, but because you became better. So if you're still struggling, if you're still making mistakes, if you're still wondering whether you'll ever make it, don't judge your future by where you are today. Judge it by whether you're still willing to learn tomorrow. Because the market rewards those who keep improving, not those who expect perfection. And never forget this, the market isn't testing your strategy first, it's testing you. And until you pass that test through your own experience, no course, no mentor, no signal group, and no shortcut can make you consistently profitable. The market doesn't owe you success. But if you respect it enough to keep learning from it, eventually it will reveal the trader you were capable of becoming all along.